the
Started.
I think we're live now, is that right?
Yes.
All right. Good morning and afternoon, everyone. Welcome to the Leaders in Housing Counseling webinar. Today's topic we'll discuss any changes that have been made to the student, what is it again? Student Debt Crisis Center and Savi will be here today to discuss any changes that have been made to the student loan forgiveness program. What I'll do at this point is turn it over to Bruce Palin. But if you have any questions during this webinar, you can add them to the chat. There will also be a moment at the end of the presentation where you can ask any questions. So Bruce, I'll turn it over to you and you can take it away from there.
Excellent. Welcome, everybody. Glad to be here. We're doing an experiment today. We're trying out the Zoom technology. We usually do GoToMeeting, GoToWebinar, and our friends at Savi have a robust Zoom connection, and we thought we'd try this. So let us know what you think of it. If you think it's better or worse than what we do in the past, we're really trying to learn how to do this the best. We're kind of hopeful if it works out because it has better captioning, we think. We'll see. This is our experiment in all this. Okay, well, welcome everybody. And what we're going to do is we're going to do some updates on the work we've been doing. It's been actually a couple of weeks since we've talked, but wanted to bring you up to date, especially on legislative things and projects we're working on in the field. But the most of the call will be devoted to what's happening with student loan forgiveness, and there'll also be some other updates on things that are happening with student loans. And we have our friends from Student Debt Crisis and from Savi who have been here before. They're really our cutting edge experts on what's going on in the field and really, really helpful. And I think they're going to share their thoughts about this from the perspective of how housing counselors should be using this information. So glad to have a good turnout today. Thank you so much, everybody. We'll do a Q&A at the end. Expect that this will probably go over the usual hour, and we've kind of budgeted an hour and a half for the session. Usually there's lots of questions, and feel free to ask questions both on the student loan forgiveness issues, but also on other student loan issues. If you've got them, these people are well versed in all of it. And then we'll make a quick plug at the very end about joining Nhrc. We've really had a great year, and we deeply appreciate how much everybody's stepped up to keep us going, and really appreciate that a number of you have actually, that your budgets have allowed you to increase the amount that you do for your membership dues this year. So thank you so much, everybody. This has been a good year on the dues department. And there's still time to join for 2021 if you want to squeeze yourself in. Okay, with that quick note, let's dive in. So as everybody I'm sure is well aware, Build Back Better is still grinding its way through. The House voted it out, only Democrats voting for it, and it's in the Senate. And the Senate has its own set of complications, and I would just point out two of them. One set is that there are some moderates who have some concerns about the amount, and then some about specific issues. And those people are Senator Sinema from Arizona, Senator Manchin from West Virginia, and to a lesser extent, but some extent, Senator Tester from Montana. And so groups in those states who would feel like communicating how important it is to get the housing provisions in Build Back Better in, this is a timely time to do it. So that's one set of issues that still need to be worked out. They're trying to get to a place where they can vote before Christmas on this. The other one is the Senate has, of course, the filibuster rule that any senator can require 60 votes for most legislation, but for reconciliation of the budget they can do it with a straight 50 votes plus the vice president's vote to break the tie. And the key issue here is that there's a parliamentarian who rules about what really is a budget issue. And we'll probably see a great deal of this in the next few days. They have been going through the bill with the parliamentarian this week with the goal of trying to get a clear sense of where things stand on each of the sections of the bill and why they're budgetary, but there may be an argument that some of them are really programmatic policy issues and should be done in other legislation, which would mean they would get cut out. We mostly think that the housing provisions that we've been most concerned about have not been controversial. There's a little concern about some specifics, the right of first refusal on low-income housing tax credits that there's some pushback on, and hopefully that becomes less of an issue. But that's for existing buildings once the tax benefit has run out. So a very valuable provision for preserving affordable housing. But lots of major things in them. This is really great legislation. I think it's worth communicating that this is both a big game changer, and unfortunately the public debate has been about the disagreements between the parties and within the Democratic Party, rather than how deeply this will really improve housing and wealth and equity in the United States. So we'll see where all that lands. First generation down payment assistance is still there, still at $10 billion, and built within it is $500 million specifically for housing counseling. Right now, in the bill, it's also that in order to get the down payment assistance, you have to get housing counseling first. And that we think is really, really valuable and worth it if you're communicating with any Democratic Senate office, especially the moderates, but any of them, saying how important this is and how valuable it will be in terms of improving housing for people. So thanks for everybody's support on all this. We will continue both monitoring this and nudging it forward. Ellie and I were just talking with representatives from the Senate Banking Committee and House Financial Services last night about some wording changes and where they think things will land. It still has, the housing provisions, or at least this provision, has not been ruled on by the parliamentarian yet, so we'll see what happens. The second thing I just wanted to mention is, we've talked about this in the past, there's the Section 8 homeownership voucher program, which is a very tiny program at HUD. Everybody thinks about it as a rental program, and that's really basically what it is. But that's because the program is vastly underused. And we have pulled together one of our working groups, bringing in together representatives from a broad range of not only housing counseling, but public housing authorities, trade groups, and interested parties to help figure out why it's not doing well and what we can do to improve it. And we posted a whole set of reforms that we're proposing. They are ambitious and targeted. The good news is a lot of it can be done administratively by HUD. A lot of it does not need to be done through legislation, though some might be needed to be done by legislation. And we had a really excellent meeting, that's probably 3 or 4 weeks ago now, with HUD, including with Alana McCargo, who is from the Secretary's office and one of the leading voices on both affordable housing and race equity. And this came from the Urban Institute, and we'd worked with her there. She's been nominated to be the head of Ginnie Mae, which of course is the investor for FHA loans. We're hoping to, it was a warm response that they had, and they actually asked very good, very technical questions. We're now at the point where we're trying to get a second meeting. I've not heard back yet about that, but we'll continue working on this. And certainly if you're a group that's done some work in Section 8 home ownership and would like to be part of the conversation, you should let me know. We've added a few groups just recently since the meeting where there's more interest on all of this. And I think it's an important place to increase the level of home ownership in this country for lower income people and for Black and brown home buyers, that this is a critical tool. And one other conversation we're doing that we have some deep conversations, and we'll develop another working group around, is we've been asked by the National Fair Housing Alliance and the Mortgage Bankers Association to really develop a program for tracking our clients. We say this through the home buying process, but we know that you can track your clients well within your system. The problem is getting it recognized, how they first came in, did they come to an event, how else did they come in? And then more importantly, what happens to them after you leave? They leave your doors, and or your Zoom calls, or however you work it. So this is actually a big technical problem, because I'm sure a lot of people go to an event with you, and then they come through your program and they're ready to go. It might be 6 months or a year before they make an application to bank or put down money for down payment assistance, and they might have become disconnected from you, and you don't know what happened, and we're not able to evaluate whether the event that people originally came to, or whatever the channel was, how effective it was in terms of really getting people to the end goal. So trying to figure out how to link all those together, and probably talk about some technologies and client tracking systems. But this is really, really important. If we're going to become the gateway for critical homeownership programs, we have to be able to show this level of performance. So anyways, and we'll bring lenders into the conversation. They need to be part of the solution. We're really trying to think this all through. So again, if this is an area you're interested in, please let me know. And let me hand it over to Ellie for her comments.
Thanks, Bruce. Ebony, can you go to the next slide, please? Thank you. So I just want to give a quick update on a few items. The Housing Assistance Fund. So the word is that just about every state has now submitted their plan and has gotten some kind of information, from Treasury. 3 states have actually gotten full approval from Treasury. That is New York, Ohio, and Maryland. None of them have actually started their programs yet. And it's looking like, in general, they're all thinking that sometime in January will be the full launch, and maybe some soft launch in the end of December. So that's where we're at with the Housing Assistance Fund. We have been talking a lot about a housing counselor career path. So we've done a couple of things to try to really build that. We know that organizations are looking to hire up based on, housing stability counseling program monies. There's hopefully a pretty decent increase in funding from the Office of Housing Counseling coming up for fiscal year 2022. Right now it sits at 100 million. There's potential dollars in the Build Back Better Act to fund housing counseling for those who would access the first generation down payment assistance. There's funding through the Housing Assistance Fund potentially at the state level where states are coordinating with housing counseling. So with all of that, we know that folks are trying to staff up. And so 2 things that are happening. In January, there is a housing counseling certification training. This is not geared towards existing housing counselors. This training is geared towards folks who are not in the industry, but are interested in entering. So if you know people who might be interested, this training is happening in January over 6 different evenings, 2 to 3 hours each time. And the link there on the screen is to sign up and register for the training. And then we also have put up a housing counseling job board. And on that job board, as a HUD-approved housing counseling organization, you can go in there, you can sign up, you can post jobs. There's no charge for you to post your job. And also people who are interested in potentially applying for housing counseling jobs can sign up for to put their resume up. I'm sorry, I keep being distracted by the messages that are coming through in the chat. Yes, we will put the links up for the job board and for the certification training into the chat. The Housing Counseling Job Board, if you're an organization, you can post a job, and if you're someone interested in applying for a housing counseling position, you can post your resume. And with that, I turn it back to Ebony, I guess.
Okay, so we're going to get right into these updates on the student loan forgiveness program. So I'm going to turn it into the hands of Savi and the Student Debt Crisis Center to take it over from here. Okay, guys, in your hands.
Thank you, Ebony. And with that, Ebony, I think we can go to the next slide.
Good thing.
Well, hi everyone. I'm Natalia Abrams. I'm the president at Student Debt Crisis Center. We are also Student Debt Crisis. That might be more familiar to you from years past. We are a C4 and now just became a C3 under Student Debt Crisis Center. We're a nonprofit dedicated to helping people pay back their student loan debt and changing the laws. You can go to the next slide. So today we're joined by Savi as well. I believe we have Lindsay Clark on from Savi.
Hi, Natalia. Hi, everyone. It's great to be here. We're going to talk a little bit more about Savi later on, and I'll be talking to you about programs like public service loan forgiveness. So I appreciate being here, and stay tuned.
Thank you, Lindsay. And we also have Cody Hunanian from our team and Sabrina Calazans, who will be helping with chat. If you have any questions during this, please ask us in the chat box. And we will also get to some of those questions verbally at the end of this workshop. So about today, we're going to be covering briefly some basics that are always helpful when looking at the public service loan forgiveness program. As I mentioned, we will definitely take time to answer your questions and happy to stay over if needed. And then it's just always important to note that we're not financial counselors or attorneys. We are borrowers or former borrowers here to help you. And then also Savi's tool is just phenomenal in terms of really taking you to the finish line. Moving on. So we're going to go over, some of this may be familiar to you, what's gone on with student loans and COVID relief. There are some updates on what's going on with loan servicers. Some of you may have heard that loan servicers are getting out of the industry and borrowers need to find new servicers. What you're all probably here today for, which is the temporary Pslf waiver. And as Lindsay will explain in just a little bit, how this has been expanded to help far more people than ever before. And then how to utilize the Savi tool with all of the updates and information we're giving you. Moving forward. So we always start with federal loans and private loans. And you're all housing counselors. This probably isn't news to you, but what we have found when working with student loan borrowers, so this may be with your clients, that often people don't know which types of loans they have. So that's why we always include this. Federal loans, first stop is studentaid.gov or utilizing the Savi tool. But if you don't find your loans at studentaid.gov, then more than likely they are private loans. Federal loans offer things like fixed interest rates, a variety of repayment programs, hardship deferment, default rehabilitation, most importantly, public service loan forgiveness. Private loans do not offer those things. They do not have default rehabilitation. And the way to find them is credit report or contact the lender and ask them. We also see crazy interest rates with private loans, as I'm sure you've seen with your clients. With federal loans, they, range depending on when the person took out the loan, anywhere from like 2.5% to 9%. Moving forward. So in March of last year, sorry, with COVID, I get a little turned around with time. So March of 2020, former President Trump declared that student loans, the majority of federal student loans were on pause at a 0% interest rate. And I say the majority because there was a small group of commercially held FFEL loans, federal family education loans, that were excluded. So we do hear from borrowers all the time, my loans haven't been on pause. That doesn't necessarily mean that they have federal loans. That just means, or they don't have federal loans, it means they could have those commercially held FFEL loans. But in March of 2020, loans were put on pause. This was extended a number of times, as you can see. The important thing right now is that highlighted portion that we are barreling into February 1st of 2022 of next year, where all student loans, about 40 million loans, will be turned on at the same exact time, and borrowers will have to make their payments in the month of February. That's very important. You know, we are fighting as advocates to get that postponed. You know, I'll be frank with you all, we are really hearing from the department, just like they said when they extended loans in September, that was the final time, and we will be resuming repayment February 1st. Moving forward. So just to go into a bit of what this relief did for borrowers, payments are suspended until January 31st, beginning February 1st. The suspension does count, and this is very important, towards public service loan forgiveness and towards your repayment programs. So, you know, if you were working in your public service job during this pause, those months count. I think we'll be up to something like 18 or 20 months, I'm not doing my math correctly, of free months that you'll get counted towards public service loan forgiveness if you've been working in a public service job. You know, you weren't able to make payments. So that's a good thing. Also, if you're in an income-driven repayment program, that those months will also count towards that. So that's just something important to note. And if you just heard about public service loan forgiveness and you're still working in that job, there's still a way to make that time count. So some more relief, so tax and social security withholdings for federally held student loans in default has been suspended. Borrowers in default should not have been receiving wage garnishments. And those that did, if anyone had a wage garnishment in a federal loan post March of 2020, they are entitled to a refund. Also, collection activities should have been paused. I always say should just because we have heard from borrowers over the past year that this wasn't exactly true, but for the majority of borrowers, they should not have been harassed during this time for their student loan payments. Moving forward. So this gets into who and why I said, you know, the majority of borrowers. So this was for all federal direct loans and loans that are federally held. Until recently, there was absolutely no relief for commercially held FFEL and Perkins loans. There has been some relief for those in default, having their interest and debt collection paused, but there was still no payment pause for these commercially held FFEL loans. And I just want to note that this was to no, if you're one of these people on the call, this is to no fault of yours, no fault of the borrowers. It was literally just what loans were purchased and what loans were purchased back in 2010 when they created or when they made the direct loan program the only program for student loans. Also, private loans have not been eligible for any of this relief during this time. Moving forward. So I want to just talk to you because it's important to understand the bones of, you know, student loan repayment to then understand public service loan forgiveness. When you take out your loan, you graduate, then you are initially put into a 10-year standard plan. Standard is in quotes because if you worked with borrowers at all, most of the borrowers we work with do not pay off in 10 years. And so there are more affordable options if they cannot make that large monthly payment that they're required to when they first graduate. And you'll see that moving forward. So there are income-driven repayment programs. These are programs that are based on your income versus your overall debt amount. This can be very beneficial to borrowers. For example, if you make $0, you can pay $0 monthly or be in that program and still chip away months to paying off your debt. It is calculated as a percentage of discretionary income. They do not take into account cost of living, but they do take into account family size. Moving forward. So this is an example of what that is. As you can see, that $0 would be $0, but let's take an example of somebody that's just say Mary, they make $37,000. I'm sorry, their debt is $37,000. What would their actual payments be? Then if they're not working, and I understand this doesn't show the income, but this shows the income, excuse me, on the left side. If they're not working at all, their payments would be $0 versus the $364 standard. Not until you get into slightly higher incomes does it start to get anywhere close to the actual payment they would be making. These can be very life-saving for those looking towards default. And one of the things we try to do at Student Debt Crisis Center all the time is help people avoid default, which is no place any borrower wants to be. Moving forward. So who benefits from these plans? Definitely people and borrowers that have consistent lower or no income. Especially right now during this pandemic, if you know of borrowers that have lost their jobs or had a decrease in hours, we suggest that that's to the third point, that you lock in payments now. At any point, if you lose a job, you can always go to a $0 payment, even if, let's say you applied 2 months ago, then you lost your job, you can reapply and reset those payments at a lower rate. We highly suggest doing this as soon as possible because of the fact that they're turning on 40 million loans at the same time. And I do not think it will be smooth sailing, to say the least. So the sooner the better for this. You can lock in payments for a year. This is also great for those who have been excluded from COVID relief, but are still looking for some relief because they can't make their monthly payments. So this is an example of the various repayment programs out there. I'm not going to go through each one of them. This is the wonderful value of the Savi tool and why we have partnered with Savi for a number of years, because to go through each one of these and to figure out which best for your client, that's not even something that we do or is right for us to do. So that's where the Savi tool comes in. But what is good to know is that over the years, the plans have become better. If you start from, I guess, my right to left, income ICR, which is the first program that came out, that's 20% of discretionary income. Then you get to things like revised pay as you earn, it's pay as you earn, that's 10% of discretionary income. So you can see that the program got better. We also went from 25 years with income contingent repayment to 20 years of payoff for a majority of federal loan borrowers. It's still a long time, we know that, but again, it's much better than falling into default. And as you'll see moving forward, with public service loan forgiveness, combining income-driven repayment plans with public service loans to pay as little as possible and then to have the most forgiven after 10 years is the best route for you and your clients. So with that, I'm going to pass it to my partner and executive director at Student Debt Crisis Center, Cody Hunanian.
Great. Thank you so much, Natalia. And I do see folks are putting their questions in the chat window. Thank you all so much. They're definitely on point. I know we are actually going to touch on these explicitly throughout the presentation. I'm checking off the ones that I think are very relevant for the entire audience, and we'll also address those at the end here. So with that, Natalia just mentioned the income-driven repayment plans. Advocates, for the most part, believe that those are the most powerful tool that borrowers have right now to make their monthly payments more affordable. What is the problem for many borrowers is that they will call their student loan company or they'll go online to the Department of Education. And what they'll be exposed to is the income-driven repayment plans, as well as a myriad of different repayment options that I put here as alternative options. I'm not going to dive into these because, as I mentioned, typically these options are less beneficial to a borrower who's struggling to afford their monthly payments. But I do want to just address them, let you know they exist, because as you're working with clients or you're taking on your own student loan situation, these may come up. So outside of the affordable income-driven repayment plans, there are an extended repayment option that extends the length of your payment plan, your payment schedule. There's graduated repayment, which has your payments start off small early in your repayment journey and slowly increase. There is extended graduated, which is a combination of the two. And then there's forbearance and deferment. I'm sure as housing counselors, you all are familiar with these terms when it comes to other financial products. Typically, a forbearance and a deferment, I would call a bit of an emergency option for a borrower. Yes, it can pause their payments, but for most borrowers who are struggling long-term with their payments, the interest that can accrue and the short-term nature of these options aren't a great solution. For all of these reasons, this is why we really focus in on the income-driven repayment plans. And as Natalia mentioned, when pandemic relief ends in February, on January 31st, and payments begin February 1st, we're going to want borrowers to take advantage of the best options for them. So these do exist, these alternative options. You may find them along the way, but always keep in mind that these other income-driven repayment options are likely a great option for borrowers that are struggling long-term. Now, Natalia mentioned at the beginning of the workshop, this clinic portion, and I just want to address one more time. Unfortunately, most of the benefits we're talking about are only available to federal student loans. There are many clients of yours and maybe many people on today that have private student loans, the kind of student loan you get when you go to a bank or use like a lender like SoFi, Wells Fargo, Discover, something like that. Private loans did not get any of the pandemic relief, that was given automatically to federal student loans. There were some case-by-case options though. So we always encourage people with private loans to contact their lender and see if there are options available. Particularly at the beginning of the pandemic, we saw that states and local governmental leaders were using their powers to leverage private lenders to offer something to borrowers during the pandemic. For the most part, a lot of those options have ended because banks only offered them for short term, but you may start talking to your clients who remember signing up for something earlier in the pandemic or were part of some benefit, and you'll want to know that these are agreements that they made directly with their private lender. These aren't the kind of federal options that just exist in law. And also in that corner, we always caution folks about the idea of refinancing a federal student loan. What we often hear from borrowers and even from professionals is that they're familiar with traditional financial products, which offer a refinancing option, which lowers your interest rate, lowers your monthly payments, etc. But what folks fail to realize is because of this important difference between federal student loans and private student loans, someone with a federal loan that wants to refinance will have to seek out a private student loan to replace it, and then they lose all of the federal consumer protections, repayment programs, loan forgiveness options, and all of that. So as folks are thinking about trying to improve their financial situation, lower their monthly payment obligations, all of these different things to try to make their housing situation more tenable, refinancing often seems like a great option. Here in the student loan space, it's a little more complicated. Great. So I know we're going to dive into a lot of the updates related to public service loan forgiveness, but right now we're actually facing unprecedented situation in the federal student loan space because there's a ton of changes happening in a lot of different areas. And one of the biggest things that's going to be happening over the next few months is that several of the largest federal student loan servicing companies are leaving the industry permanently. These include some of the biggest names: Navient, FedLoan, Granite State's a little smaller, but they've all announced that they're going to stop servicing federal student loans over the next year, really. What that means is that 16 million people, more than a third of all student loan borrowers, are going to have their servicer change. And it's even more important for people who are interested in public service loan forgiveness, because FedLoan, one of these companies that's leaving the industry, is the only company that services loans that are on track for public service loan forgiveness. So there is a domino effect that happens when these companies leave the industry. Let's move to the next slide here, and I'll talk about some of the specifics. And I saw a question from Sharon that I want to address as well. Just to refresh your memory, on the left here, we have federal loan servicers. There are a handful of big companies that are responsible: Navient, Nelnet, FedLoan, Mohila, Great Lakes, and Granite State are all federal student loan servicers. On the side here, we have the private servicing companies. You'll be familiar with the Sallie Mae's, the Wells Fargo, the SoFis, and the Navients of the world. It's the companies on the left-hand side here, the federal servicers, that are going to be having a lot of these changes coming in the coming months and over the next year that you're really going to want to keep an eye on. Now, I'm glad we included this slide. Sharon asked, or made a comment that, obviously a borrower isn't going to be responsible for transferring their loans from one servicer to the next. In some ways, that's absolutely correct. Obviously, a borrower does not have to change accounts. It should be automatic. But what a borrower should do is take steps to make sure that this process happens without error. Imagine millions and millions of accounts shifting over the next few months. There will be errors. There will be things that fall through the cracks. And unfortunately, that's where a borrower may have to be proactive to make sure that it works seamlessly. So here's some tips that we have. One, a borrower should definitely update their contact information. One of the biggest issues we find is that when a servicer changes, their mailing address, their phone number, their email address isn't current in their account. And so the communications sent to them related to this change never make it. So that's step one. Step two, and this might be the most challenging, it is for me, a borrower who may be impacted by this needs to check their mail all the time. And it's even more challenging because what's going to happen is they're going to get mail, likely, and email from their new loan servicer, who is likely a company they've never heard of before. This has happened to me. I actually have a mortgage that's changed hands several times, and I've missed that mail that showed up. For a loan servicer or a student loan borrower, this could be even more problematic because some of the companies in the space are lesser known. So a borrower that's at one of these three big companies should keep an eye out for mail and email that they don't recognize, but maybe about their student loan situation. Third, save copies of your payment history. One of the big issues can be that through the process of transferring your accounts, some of the details about your payment history, progress you've made in certain repayment programs or loan forgiveness programs, some of that recording can be lost. And so a borrower should save copies from their current account so that they have that physical evidence when they get into their new servicing account. And also, lastly, set a reminder to go to your new servicer account once it's up and running. We want borrowers to log in early, check all the details, verify the information is correct as early as possible to prevent any, kind of snowball domino effect that could happen if you wait months and fall behind on payments, miscommunications, or whatever it may be. So that was one big update. Another big update, and this has been getting a lot of news, so you or your clients have likely heard of this. The Biden administration has actually done a lot of updates to programs that can erase people's student loan debt for particular reasons. These programs, by the nature of them, have narrow qualifying factors. And so it typically means that few people will qualify, but at the same time, it can be incredibly powerful. So one of them is borrower defense to repayment. There are thousands, maybe even tens of thousands of people who have been defrauded by a for-profit college or another predatory institution. And by law, they are eligible to apply to have their loans discharged because of that. For years, borrower defense to repayment was hamstrung, particularly during the last administration. It was pretty much halted. This administration is committed to getting this program back into movement, working for borrowers. And there are people who are having their student loans erased because they were defrauded by a school, particularly if it's one of these notable schools that shut down, like a ITT Tech and some of these other predatory schools. There's also borrowers who are permanently disabled that were eligible for student loan forgiveness. Now, a borrower to be disabled and qualify for this has to be totally and permanently disabled. But that still includes a lot of Americans out there. And it particularly includes some sensitive communities like disabled veterans and service members. For years, this program has existed. What has often been the problem has been streamlining the application process. So the department has committed to providing additional relief to these borrowers, particularly by making the application process as seamless and easy as possible. So we want to just identify that these programs are happening. You're likely hearing about debt cancellation in the news. And some of your clients and some of you may very well actually qualify for some of these smaller niche offerings. And just to round that out, there are a host of federal programs that offer forgiveness, cancellation, or discharge. I mentioned if you're totally and permanently disabled, you can have your student loans erased. Kind of related to the fraudulent schools, if your school shut down while you're attending or shortly thereafter, you can qualify for a closed school discharge. So these are people that maybe attended these predatory for-profit schools, arts institutes. You know, there's non-accredited programs that are problematic. Typically, these are schools that are less than reputable, yet take on tons of students, access federal financial aid, and shut their doors because they're non-sustainable. And a few others, you know, if you are certified for a program that you could not ever do in reality. For example, we heard of a student once who was put into a program that required visual acuity and they were blind. Like, that is fraudulent in its own way. You could get your loans discharged. That's a little more complicated. And there's some other smaller niche programs. All of this is just to say that there are programs that exist for people in particularly nefarious situations that could lead them to have their student loans discharged or canceled and lift that burden off their backs. All right, so those are those smaller but important updates. I'm going to pass it over to Lindsay Clark at Savi, who's going to jump into the bigger and most exciting update, which is the Public Service Loan Forgiveness Program.
Great. Thank you, Cody. And hi, everyone. Again, my name is Lindsay Clark. I'm Director of External Affairs here at Savi. We've had the pleasure of partnering with Bruce and Ellie and everyone at Nhrc around our student debt solution. And I'm excited to be able to talk to you today more specifically about some of the big changes that have come through around public service loan forgiveness. I always say one of the most unfortunate parts of my job up to this point was, having to give these workshops and usually being the bearer of bad news when it comes to eligibility requirements. And unfortunately having, the job of telling someone they weren't eligible because of a technicality like their loan type, despite the fact that they had been working in public service, for 10 or more years. So I'm particularly excited personally to be able to talk to these changes today, because for those people who were previously ineligible, they are now, most of them are going to be able to benefit. And for many, that means full forgiveness on their loan balance right away without having to make another payment at all. So some really life-changing stuff. So with that being said, just sort of an overview of what's happened. Back in the beginning of October, the Department of Education announced what they're calling a limited Pslf waiver. Now, just to clarify, that waiver is not a physical thing, or it's not a form that you need to submit, but it sort of is representative of this period of time between now and next October 31st, 2022, during which borrowers have the ability to get previous payments that they might have made on their loans and that were deemed ineligible to now count towards the total 120 required credits that they need in order to receive full forgiveness on their loan balance. The Department of Education is also going to be reviewing previously denied applications in order to sort of reassess and redetermine eligibility based on these new changes. And for sort of this certain sort of portion of those borrowers who are eligible, they are going to receive this forgiveness and be credited for these payments automatically. So I'm going to sort of talk through who can expect something to be happening automatically, who needs to take action in order to take advantage of this. And we'll sort of talk through that in a second. I'm already seeing some reactions in the chat. So yes, this is amazing news and really, really big. Especially, if anyone on here has already had experience trying to apply for this program, and I bet money on the fact that it's probably been a very negative experience, given the fact that less than 1% of people have been accepted. So we'll make sure that all your questions are answered today, so that you and any of your teams and employees, any person that is a qualifying borrower and works for a qualifying employer, is eligible and able to take advantage of this. All right, so on this next slide, just to sort of give everyone a refresher on the PSLF program, and we'll sort of take a step back here. So public service loan forgiveness, or PSLF, is essentially full forgiveness on the remainder of your loan balance, whatever that may be, $10,000, $500,000, doesn't matter. Tax-free, okay, so no tax implications, after you have made 120 qualifying payments. And I say that in air quotes because the devil is really in the details here as far as what constitutes a qualifying payment. Now, this program started in October 1st of 2007, okay? What that means is any eligible employment or payments, okay, from October 1st, 2007 to present are fair game. Okay, so anything before that doesn't count. All right, so let's say you've been working in public service, since 2002, only your employment from October 1, 2007 to present is eligible to count. All right. Now, these 120 payments, okay, do not need to be made consecutively. They just need to be made cumulatively. So you just need to reach 120 total qualifying payments. Right? Many people are often confused about that. So for example, if you worked for a nonprofit for 2 years and accumulated 24 credits towards forgiveness, and then let's say you went to work in the private sector for a bit, nothing happens to those credits. They simply pause. You pause accumulating them, and then when you resume, if you resume eligibility and working for a qualifying employer at some point, you can resume accumulating credits. So what that means is, at a minimum, all right, the quickest that you can achieve forgiveness and reach that 120 payments is 10 years, all right? Because you can't make double payments and receive double credits. You can only receive one credit per monthly payment, all right? So you can't get there any faster than 10 years worth of payments, all right? But again, they don't need to be made consecutively. Many people go on to a deferment or forbearance at some periods of time. Those periods aren't eligible to count, but again, doesn't reset you or anything like that. You just need to reach 120 total. And then once you reach that 120, you're eligible to have, again, that loan balance, remaining loan balance forgiven tax-free. All right. So that's sort of the basic overview of public service loan forgiveness and sort of what it offers. On this next slide, so I'm sort of going to describe here how many borrowers are able to take advantage of the program and where we want to sort of make sure that you're maximizing the benefit of pursuing a program like public service loan forgiveness. So really, if you are going to be eligible for forgiveness under this program and planning on working 10 years, or close to it, you want to make sure that you are minimizing your monthly payment. And one of the best ways people can often do that is through income-driven repayment plans that minimize that monthly payment, lower that monthly payment, combined with, the pursuit of public service loan forgiveness. So minimizing that monthly payment to maximize your forgiveness is really sort of the sweet spot here, right? There's no need or reason to be paying more or extra on your loans each month, in an attempt to try to pay it off more than you need to, because again, we're setting you up to have it forgiven, right? So it's okay if some interest is accumulating and things like that. Really the maximum benefit comes when you're able to keep that payment as low as possible each month, so that again, you are taking advantage of the maximum benefit in forgiveness. All right, so when it comes to these recent changes and announcements around the PSLF program, I'm going to sort of break these down as follows. So when it comes to things like your loan type, okay, previously only direct loans qualified for public service loan forgiveness. You had to have a direct loan when you made that payment in order for that payment to count as a qualifying payment towards the 120 you need. Now, under these new rules, older types of loans known as FFEL loans, FFEL loans, which Cody and Natalia talked about, federal family education loans, as well as Perkins loans, are now eligible to count. All right, which means that if you made a payment while you had a FFEL loan, okay, that is eligible to count as a qualifying payment. Previously in the program, when borrowers went to apply, and this is one of the biggest reasons why so many were rejected, when they went to apply after they'd made 120 payments, they were rejected and told they didn't have the right loan type. They had these FFEL loans, and they were told they would need to consolidate that loan into a direct loan in order to be eligible, and basically start back at zero and work another 10 years and make another 120 payments. All right. That's what many, many borrowers experienced with this program the first time around. Now, those borrowers who were previously rejected, okay, and who have these older FFEL loans, even though they still need to consolidate that loan into a direct loan in order to become eligible, now those payments made before the consolidation while they had that older type of loan are now eligible to count. So what that means is you'll see borrowers who, because those extra payments now count, are already at or over 120, or they're going to get a huge bump towards that 120. They thought they needed to start over and maybe we're only 2 years in. Now they're only a year away from forgiveness. So it's really going to impact a ton of people. When it comes to repayment plans, this was sort of the other technicality that borrowers needed to be aware of. Previously, only the income-driven repayment plans qualified for public service loan forgiveness. With the addition of what's called TEPSLF, or temporary expanded public service loan forgiveness, standard repayment plans could count as well. That was sort of something that happened in the past couple of years. But now, any repayment plan, okay, including standard, extended, graduated, all the types of income-driven repayment plans, doesn't matter what repayment plan you are on. Payments made, all right, on the loans are eligible to count, all right. Again, both of these two changes, okay, and being able to take advantage of sort of any additional payments that you could be awarded as a result of them, expire October 31st, 2022. So you have until then to take advantage of sort of earning these additional credits. Okay, so on this slide, I'm going to sort of go through, even a bit more what the PSLF rules were before the temporary waiver went into place. So again, on your loans, you could only have direct loans. Okay, you had to consolidate those FFEL loans and Parent Plus loans, in order to qualify and then start back at zero. As far as employer goes, it's any government organization at any level, federal, state, local, or tribal, or any non-for-profit 501c3. The only stipulation here is that you need to work a minimum of 30 hours per week. And then as far as repayment plan goes, again, the income driven as well as the 10-year standard under TEPSLF. And you needed to make that payment for the on-time and full monthly amount. So these were the rules before the changes were announced and went into effect. So, you think about really three things: your employer, your repayment plan, and your loan type, okay? Employer needed to work for a qualifying employer laid out there and be minimum of 30 hours. Your repayment plan, income driven primarily, okay? Sometimes, standard plans can count under TEPSLF. And then your loan type had to be a direct loan. All right. Now, so I will say on this next slide, what that resulted in is, like I had said, many of these technicalities preventing borrowers from achieving the promise of the program. So they were rejected because they either had the wrong loan type or in the wrong repayment plan, or they had their certifications denied, or they might have made a late payment, or their servicer did not credit their payments properly and payments were lost. And so these are all sort of administrative issues that borrowers faced, and what really sort of made the whole system broken for those who were trying to pursue forgiveness under the promise that was made of the program, which is you work in public service for 10 years and your loans can be forgiven. So now I'm just going to sort of review again, after this waiver has gone through on this next slide. So this is what currently during this waiver period until October 31st of 2022 is eligible to count as far as eligibility goes. So we've got loan types, direct loans, okay? These FFEL and Perkins loans, older types of loans, are eligible to count now. You still need to consolidate them, okay? So you still need to consolidate into a direct loan. However, the payments you made prior to that consolidation on those older loans are now eligible to count, all right? Your employer, this has really not changed. The qualifying employers have rules have not changed here as far as government organization or 501c3 nonprofit and a minimum of 30 hours a week. The only addition here that is quite interesting and we've already seen it impact a lot of people already is previously you needed to be employed at that qualifying employer during the time you were applying for forgiveness and through when you actually received the forgiveness on your loan. Okay. Now they've waived that, and you can actually be retired or no longer employed and apply for PSLF forgiveness and receive it. So I'll just give you a quick sort of anecdotal example here. Working with a borrower who is a public school teacher for 20 plus years in Los Angeles, retired in 2019 with $70,000 in student loan debt. Okay. She's in her early 70s, and she is now, under these new rules, going to be eligible to have that full $70,000 forgiven without having to make another payment in the next couple of months, because she, during that 20 years of public service, had made 120 payments. However, when she went to apply for the program, she was rejected because she was on the wrong repayment plan. And then she ended up retiring and thinking, well, there's no hope for me to take advantage of this anymore. Well, this has been life-changing, obviously news for her. And there are many, many other people who are sort of in the same boat. So that's one of the new additions on the employment side. And then as far as repayment plan goes, again, any type of repayment plan is now eligible to count. And in addition to that, those payments don't need to have been for the on-time and full monthly amount. They can have been late. Or they can sort of be for the not full amount. The department is somewhat vague on the language they use here, which is why we use the phrase on time-ish and in full-ish, but they are basically going to be generous in counting previous attempts at payments during those months. All right, so these are sort of the big changes. So the potential results here is that for sort of a first wave of borrowers, about 22,000 people who are going to receive automatic forgiveness in an estimated range of about $80,000. And those people have already started receiving that forgiveness as we speak. The next band of borrowers is about 27,000 people who will also sort of receive this automatically, but they just have to certify one more period of employment but their average forgiveness is going to be at least $100,000 per person. And then there is sort of this bigger group, about nearly 500,000 people who are going to be able to get credited an additional 2 years on average that they estimate from these changes, an additional 2 years worth of qualifying payment credits towards the 10 years needed based on these changes. Now, that's just the borrowers that the Department of Education, is aware of because they have submitted, a PSLF form and their loans are with FedLoan. The majority of PSLF eligible borrowers out there, they're, roughly 4 million people in the country as eligible for the program, haven't either submitted a form yet or maybe submitted a form and were rejected from the program. And so are sort of outside the system, but are eligible to take advantage of these changes. And eligible in a big way, to receive full forgiveness right now. But they just need to take some steps and actions in order to get that process started and to do that. And I'm going to lay out exactly what actions you need to take on the next slides. I apologize. We might be going a little over in time. So Bruce, Ellie, anyone, just feel free to cut me off if I have to stop. I promise I'll hopefully try to get done in the next 5 to 10 minutes, but there's just so much good stuff here. So I'll try to go as quickly as I can.
You have till 2:30, you're good.
Oh, okay, great. Okay. I was like, man, that was fast. Okay. All right. So what do you need to do to take advantage of these changes? Okay. So on this next slide, oops, no, hold on. Stay there. Sorry, Ebony. First and foremost, you're going to want to figure out what type of loans you have, because that's going to determine the action that you're going to need to take in order to determine your eligibility. All right. So you can figure out what type of loans that you have by going to studentaid.gov and logging into your FSA account. Now you might have, not remember the password or username to your FSA account. You created it when you took out the loans. And so many people have to, reset that account or password when logging in if you haven't done so recently. But it's good to be able to have access to that. So you can go there, visit the My Aid section of the page and, scroll down and you'll see sort of the loan breakdown section. And there you'll find a list of each and all of the federal loans that you have borrowed. Even if you've paid off a loan or that loan was consolidated into, a new direct consolidation loan, this is sort of the official record of every federal student loan that is, under your name. So keep in mind, if you have private loans, they won't appear there. It's just federal loans. Now, what you'd want to look for is, what you see here on this third bullet, the word direct, should appear in the name of direct loans. If they are these older FEL loans, FFEL is what you're going to want to look for in the loan name. And then Perkins loans, they'll say Perkins in the name as well. And so that's just an easy way to be able to identify what types of loans you have. So really those three big groups are going to be direct, FEL, and Perkins. Whether it's unsubsidized, subsidized, doesn't matter. Whether it's a direct grad plus loan, doesn't matter. Those are all eligible types of loans. Okay. So direct, FEL, and Perkins are the things you want to look for. Now, let's say you look at your loans and you can confirm that you have at least one loan that isn't a direct loan. Let's say it's a FEL or a Perkins loan. Okay. So what you're going to need to do in that situation is first, you are going to need to consolidate that loan into a direct consolidation loan in order to sort of trigger this process to make it eligible. So you'll need to consolidate that loan by October 31st, 2022 at the latest. I encourage you to do that as soon as possible to get that process started. Then once you consolidate that loan, into a direct consolidation loan, then what you're going to do is submit what's called the PSLF employment certification form. So just to clarify here, there is one form only when it comes to the PSLF program. It's the same form you submit when you are, applying technically at the end of 120 payments. And it's the same form that you submit to sort of get the process started to see how many credits you have. It's a form, it's called the employment certification form, that is not required, but I highly suggest that borrowers who are pursuing the program submit every year, okay, once every 12 months. That way, you are essentially certifying your credits from the past 12 months period of time, and making sure that there is nothing wrong and that you are sort of receiving 12 credits over 12 credits, right? Inching your way towards that 120. And so it's recommended that you do submit that every year, because one of the issues that we saw with the program in its initial rollout was borrowers who, waited until they had reached 120 payments, right? Or, been working for 10 years to submit that form for the first time. And that's when they were told, you're rejected because you're not on the right, type of plan or loan type. And so that's where a lot of the issues stemmed from. So I encourage you to make the effort to submit that on a yearly basis, and it'll avoid a lot of the issues that happened for many other borrowers. And you'll be able to see if anything does come up, you'll be able to see, in real time, and we can help correct that. So you'll want to submit that form, okay, and it goes to Fed Loan Servicing, and that basically through that process, they'll look at your period of eligible employment, okay, and then they'll look at your repayment history and say, okay, here's how many qualifying payments you have made. They sort of match those up. And if your loans are, not with Fed Loan, okay, let's say your loans will be transferred over to Fed Loan, all right, in order for this process to occur. Now, you can check your employer's eligibility using the PSLF help tool at studentaid.gov/PSLF. The help tool hasn't been updated fully, I would say, on the Department of Education to be able to sort of recognize some of these older loan types. And so I'm going to show you in just a few minutes how the Savi tool is something that you all have access to be able to use, and we can help basically assist you in the administrative process of applying for this program and monitoring that and ensuring that you cross the finish line. So we'll get to that in a second, but I just sort of want to walk through just generally what the plan of actions would be for those different sort of groups of people. Okay, so that was, sorry, if you can go back just 1 second. Thanks. So that is if you have a loan, at least one loan that is not direct. Okay, this is a FEL or a Perkins loan. That loan needs to be consolidated first. Okay, and then you need to submit the PSLF form in order for this process to begin and for you to get credits for this period of time. Okay, on the next slide, let's say you have direct loans. Okay. And you have already submitted some type of PSLF form or this employment certification. All right. So your loans, that means, are already with Fed Loan. Any borrower who has already submitted a PSLF employment certification that was accepted, if they weren't already with Fed Loan, their loans transferred to Fed Loan because Fed Loan is the sole servicer of the PSLF program. So this is a borrower, again, who's certified some employment, has direct loans, and their loans are with Fed Loan already. If this is the case, you should have already received communication from Fed Loan or FSA, or the Department of Ed, indicating your eligibility to receive, additional credits. And in some cases, they will be explicit about how many additional credits they estimate you will be able to receive. And those will be credited to your account automatically. Okay, so no additional action is needed from you at this time. So you're going to want to look out, and I know Cody emphasized this, looking out for an email from FSA letting you know how many additional payments that you sort of preliminarily determined to qualify for. And if you haven't received any communication from Fed Loan or FSA, but believe that you are in this bucket, please feel free to reach out to us, and we'll make sure we provide our contact and support information so that we can help you inquire about that. So that is sort of the group of people who would receive something automatically. Okay, this next group on the next slide. So let's say you have direct loans, but you have not submitted any PSLF form yet, all right? Or maybe you even submitted something and it was rejected a while back and you haven't done anything since. But you're not with FedLoan currently and you haven't certified any of your employment, all right? So you haven't submitted anything before, or it's been rejected. So what you're going to want to do is you're going to want to submit that PSLF employment certification form now, okay? That's what is basically going to trigger the review so that they can look at, again, your full now repayment history, match it up with your employment history and determine, the number of qualifying payments that you're eligible for, all right? So just because you are not part of the wave of those receiving the automatic forgiveness does not mean that you aren't eligible to receive full forgiveness right now under these new rules. It simply comes down to whether or not you have submitted anything for the program before. And this program is retroactive, so that's perfectly fine. But you have within this year-long window until October 31st, 2022 to submit this paperwork in order to have those additional payments counted and to qualify, all right? Now, because the Department of Ed expects to see sort of a big influx and surge of volume around applications as a result of these announcements, it might take a little bit longer and there might be some delays in processing. And so it's important for, again, not only you to be aware and looking at your email address, but also, one of the things Savi works closely with borrowers on is monitoring how long that processing is taking so that we can escalate those cases as need be. We work really closely with Cody and Natalia on the Student Debt Crisis Center team to escalate borrower cases. We just did this earlier this morning for a borrower that we've been working with, escalating cases where needed to federal and regulatory sort of partners and agencies like the federal ombudsman. So there's really no better people to work with than the Student Debt Crisis Center team, because they're able to spotlight those cases and issues and get a lot of them fixed on a broader scale. Again, so you have to submit those before October 31st, 2022. All right, I think on this last slide, so if you tried to certify employment before, but were denied, okay, in any capacity, and this probably happened to many people, same thing, you are going to want to submit a new PSLF employment certification form again, so that it can be reviewed under these new rules and circumstances. Now, a lot of the updates when it comes to, employer status and eligibility, didn't change those, right? You still need to be working for a government or not-profit organization, 501c3 nonprofit, that is. However, there are, I think on the table right now, proposed changes around qualifying employer to expand that eligibility to include, for example, for-profit, public service institutions. So, hospitals, for example, that might be for-profit, where you have someone who, who's a nurse working in the same capacity as, someone who just might happen to work for a nonprofit, but because of their employer status isn't eligible. So stay tuned for that. I'm sure might come back around if there are more updates, over the next year. But again, the employer eligibility has remained the same. So on this next slide, just a recap of what to do next. There are more important updates that are coming, and we're continuing to see come out on a weekly and monthly basis. So we will be continuing to share those updates with Bruce, Nelly, and the team, and with our borrowers directly that we work with to make sure they're up to speed. You can review the sort of official fact sheet that we've created with the Student Debt Crisis team at studentdebtcrisis.org. And you can indicate there if you'd like us to keep you informed and join that email list. And if you're interested in sort of taking the next steps on public service loan forgiveness and would like assistance, I should say personalized assistance, working one-on-one with our student loan experts, over the phone to be able to, take care of all of this for you. I'm going to now quickly run you through and introduce you, for those of you who aren't aware, of the Nhrc Savi tool that will allow you to do that. So on this next slide, great. So I promise that I'm almost done. I know I've been talking for a while, and hopefully I think some great questions are coming through in the chat. So, I know that the changes that I just, talked about can be very overwhelming. The Pslf program was very complicated to begin with. And so layer on top of that, these changes, and it can feel like it creates more questions than answers. So that's exactly why we have designed a tool like Savi and this partnership with Nhrc to be able to actually provide you all and your communities with student loan help in sort of really taking action and crossing the finish line. It's education that you receive here today paired with the ability to actually get enrolled and benefit from the programs. So I'm just going to briefly talk about first who we are at Savi. I think it's important because there are a lot of scam companies out there and less than reputable actors in the space, and just want to sort of give you a sense of our origin story and why we think we're a trusted source and resource for you all, and then sort of walk you through how exactly Savi can help around things like these Pslf waiver announcements and how to use the Savi tool and get set up for you and again your communities. So on this next slide, great. So Savi is a social impact tech startup based in Washington, D.C., and we were founded by policy experts and advocates who had been working on behalf of the borrower for over a decade, trying to advance policy and legislation to change these programs. And in 2017, when this first wave of borrowers were trying to apply for public service loan forgiveness, right, because the program started in 2007, so 2017, 10 years later, was the first year that people were eligible to apply. And when they saw that, when 100,000 people applied and less than 1% were accepted, they decided to do something about it here and now and developed a technology platform to help borrowers not only better understand their loans, when it comes to not only forgiveness eligibility, but also repayment options, but take it a step further and actually get enrolled and then cross the finish line on these programs. It's one thing to sort of know about what's out there, but another entirely to, take the steps and make sure that you are on the right track and benefiting from these free federal programs. So that's exactly what Savi does. We focus on things like income-driven repayment and public service loan forgiveness, and helping borrowers understand, potentially what their lowest monthly payment is, their eligibility for forgiveness, and then taking care of all of the paperwork and administrative burdens for them. We are a public benefit corporation, which means it exists in our charter and mission to serve the public benefit, which is why we do things like this on a daily basis. This is actually my second of 3 educational workshops just today that we give, because I think our sort of core belief here is that, if borrowers are better educated and more informed about their debt, then they are more empowered as consumers. And I'm a student loan borrower myself. I have a little over $200,000 in student loan debt. So I speak, personally when I talk about these things. So Savi on this next slide is working with Nhrc and has developed a tool and a site specifically for the Nhrc community, in which you and your employees and your communities that you serve are eligible to take advantage of. So there is a free account that you can create in which you can basically enter in some information and check your eligibility and qualifications around programs like public service loan forgiveness, teacher loan forgiveness, and basically see a personalized repayment and forgiveness plan. I'm going to show you sort of in a second what that looks like. And then we offer sort of a premium level of service that has a fee. If you would like us to take on the administrative burden and basically submit any and all paperwork on your behalf, we digitize all of that. We monitor signing off on those Pslf forms with your HR employer. We correspond with them and take care of getting all of that figured out, and it's submitted to the servicers, quickly, accurately, and efficiently, eliminates so much of the human error involved in the process, as well as just sort of time it takes to get this stuff done for an individual borrower. And then we monitor those applications to ensure they achieve the desired outcome. Many borrowers fall prey to application abyss, right? Where for one reason or another, despite submitting an application, it takes months or they never hear back, or it's rejected and again, never cross the finish line. And that's where we really come in to act as an advocate for the borrower to reduce that friction between the borrower and their servicer. And also under these premium services, you're able to receive one-on-one support and consultations with student loan experts, on an ongoing basis. So really just gives you a different experience entirely as a borrower, to be able to hopefully achieve the best outcome possible. So on this next slide, I'm going to show you sort of how to get started. Now, I should note that for members of Nhrc, those premium services that I just discussed, that one-on-one consultation level support and the sort of full holistic application and administrative services that we cover, that is offered for Nhrc members at a significantly reduced price. So if you are an Nhrc member and interested, there is actually a separate link that you have access to. And I encourage you to reach out to Ebony, and she will be able to provide that with you, for you. But that is a separate link entirely than the one you see on the screen for Nhrc members, in which, again, they can have access to heavily reduced, I believe by 50% rate on the premium services for themselves, employees, and communities. So I encourage you to take advantage of that. But for everyone else, they can get started by going to nhrc.bysavi.com. We'll provide that in the chat as well. And on this next slide, I'm just going to sort of walk you through a little bit about sort of, how to get started, but also, what the sort of account setup entails and how it works. So this is a look. I apologize if that screenshot is small. A look at the Savi dashboard. So sort of like mission control for everything Savi. It's where we're able to give you full visibility into your application progress. So things like what Savi has submitted on your behalf, what we might still need from you, where you are sort of in the process of crossing that finish line. One of the most frustrating things I find as a borrower is the lack of visibility that I have into what's going on with my servicer. I submit something, but don't hear back for weeks. Did they get it? Is it being processed? Or why was it rejected? So we really try to make sure that there is transparency between Savi and borrowers as to what's going on and where they are, so they can set their expectations accordingly. It's also where you can see things like new policy announcements on the left side and register for our live and interactive workshops that we do on a weekly and monthly basis. You can invite friends or family, and you can also select a plan from there. And that's where you can upgrade or downgrade to the premium services that Savi offers. On the next slide, great. So a little bit how the tool works. We essentially ask you some pretty basic questions around your tax filing status, your income, your employment. All of this helps us to identify at the end potentially the ideal repayment and forgiveness plan for you, based on entirely based on your situation. So it's personalized to the details of you and your loans. When you are entering information, you'll also be prompted to sync your loan. So on this next slide, great, it shows a little example of the loan sync. So most borrowers have on average 5 to 6 different federal student loans, different disbursement dates, interest rates, balances. It's very rare if you know that off the top of your head, and it's constantly changing. And so what we've provided is a loan sync option, which we work with a technology called Plaid, which if you have a Venmo account, you've used Plaid before to sync your accounts. It's sort of a best-in-class syncing technology. And it allows us to basically, have you enter in the username and password credentials for your servicer, let's say in this case, Navient. And what it does is it syncs over a read-only snapshot of your loan data. So it doesn't give us access or anything like that. It simply gives us a window view of what's going on. And this is important, obviously, because it helps us to do things like confirm your loan type. If you have an older FFEL loan, we actually are able to automatically tell that and flag that for you, and then help you to take the corrective action of consolidation. But it just gives us, again, that necessary snapshot into the balances and things like that, and disbursements, so that we are able to more accurately give you an estimate of what you're eligible for. And then once you've done that, you'll sort of reach this final step on the next slide, where you'll see the plan results page. This is sort of the best options that we've identified for you. And so this includes both repayment plans as well as forgiveness programs if you're eligible. So you'll see here, things like what your new monthly payment could be, how long until your loans are paid off, and what potential forgiveness eligibility looks like. You can expand below for more details about what we're showing you, and it compares it to that plan versus things like standard plans, and provides a ton of information and additional details to sort of explain everything that you're seeing. We really want to make sure that borrowers are as informed as possible about the process. And then at that point, you can click select and continue, and you'll be prompted to upgrade to Essential, or our premium service, if you'd like us to basically, create those applications for you and submit them on your behalf. So you get all of the sort of account access for free. You're able to enter your information, find out what your best options are, and reach this page. And then at that point, you have a decision as to whether you want to do that on your own, or you can upgrade for a fee, and we're able to do that for you. And then lastly, our Savi support team. So I can't say enough or speak highly enough about the internal experts at Savi who work day in and day out with our borrowers over the phone, via email. You're able to contact support within the tool. On the left-hand side, there is something that says "Need your help." You can click, and you can either send us a message, or you can utilize our interactive help center, which has got tons of great articles on everything that I've spoken about here today and more. And that's, again, all available for free by going to nhrc.bysavi.com. All right. Whew. I know that was a lot. I apologize for taking up so much time, but I'm happy to take any questions that we might have.
Awesome. There was a ton of great questions coming through. I've answered some in the chat, but I pulled a lot out of them, and I promised we would get to them. So I'm excited that we have a chance here.
Cody, I want to interrupt you just for a quick moment. I just wanted to let everybody know this session was set to go until 2:30, but it seems like people have a lot of questions. So folks can stay on until 3 o'clock. We're going to run over. I don't know if Savi and Student Debt Crisis can stay on past our scheduled time, but we're open to sticking around and answering questions as long as everybody's available.
I can hang tight until 3.
Yep, I believe I can as well.
Great, go for it.
Awesome. Great. At the top of my list here was a question from Sharon, and we get this often, so I think it's really important that we address it. But Sharon wanted to know if Parent Plus loans, the type of loans that people take out for their children's education, are eligible for the repayment programs we talked about, as well as public service loan forgiveness.
Great. Yeah, that's a great question. I'm happy to answer this one because it can get a little complicated. Let me turn my video. Okay. So Parent Plus loans are eligible for public service loan forgiveness. However, they need to be consolidated first. Okay. So, similarly to those older FFEL loans, right? So if you have a Parent Plus loan, which is a loan taken out by a parent on behalf of a child, but in the parent's name, that loan is eligible for PSLF, but it needs to be consolidated into a direct consolidation loan first. Okay. And it would be based on that eligibility is based on the parent's employment, not your child's, but the loan is in your name. So it's based on your employment. Now, once consolidated, you are eligible to start accumulating credits towards that 120. Okay. that is how the sort of the Parent Plus loan sort of rules stand currently. Now with this new waiver, okay, which, expanded the eligibility, around loan type, unfortunately, it doesn't apply to Parent Plus loans, meaning, again, you can still become eligible for PSLF, by consolidating. However, none of the payments prior to consolidation are eligible to count. It's only what's made after the point of consolidation. Okay. And I know that stinks. And I'm not sure why they weren't included under these changes. But essentially the eligible loan types now are only those given to students. And obviously Parent Plus loan is a loan taken out by a parent. So again, there's a possibility to become eligible, but when it comes to this waiver, no prior payments when the loan, was a Parent Plus loan before consolidation are eligible to be counted. So you can't gain any additional payments from before then. So I hope that makes sense.
Great. Yeah, we tend to get that question a lot. I know for parents, it can just feel like very confusing. Like, how do these programs work for parents and students? They're so different, these loans, but they're all under the umbrella of a federal student loan, which is helpful here. Natalia, I'm going to toss this one to you because this is definitely, I think, about some of the work we do at SDCC. But Bruce is asking, he says, Joe Biden ran for president calling for at least $10,000 in federal student loan forgiveness. What are the odds that the Department of Education will do across the board loan forgiveness for borrowers in the future?
Yeah, thank you, Cody. And yeah, absolutely right. President Biden, or candidate Biden at the time, ran saying that he was going to cancel $10,000, but at the time he said that was for like immediate COVID relief. I believe it was connected to when they were debating the CARES Act. He also said that he would cancel debt for those making under $125,000. So he said a few different things in regards to student loans and debt cancellation. And other than the debt that will be canceled under public service loan forgiveness or some of the for-profit college or disability discharge, that's still, I don't know, Cody, like less than 1%, less than 5% of the overall total. It's still such a tiny fraction. We are fighting hard. The fight for debt cancellation has never been bigger. We work with almost 500 organizations now that are fighting to have administrative debt cancellation. That's debt cancellation done by President Biden through executive order. There's nothing immediately on the books, though, Bruce, to answer your question. At the moment, I do think we are closer than we have been before. But unfortunately, we're just too close to payments being turned on, and I don't see debt cancellation before that, which is something our organization at Student Debt Crisis Center has been advocating for, because we think they should clean up the system before they turn the loans back on.
Great. Thank you, Natalia. All right. I see another great question here. Let's see here. Lindsay, if you're still on, this may be a great question for you, because I think you actually just were telling us about a borrower that was impacted by this. This was a question from Stephanie asking, do you get a refund if it is determined that you've made more than 120 qualifying payments for public service loan forgiveness?
So the answer is yes. You are supposed to get a refund for any payments made, past that 120. And we were, Natalia, Cody, and I were all a little skeptical of how and when that was going to happen, and the timing of that, given it was sort of a no small order to just get the forgiveness already put into place. So we were a bit skeptical. However, we have seen from borrowers over the past couple of weeks who have not only gotten their forgiveness, but then within the following week were automatically credited from Treasury to their bank account a lump sum for that refund. So this is even better news for borrowers, especially those who are probably the most deserving, and have been making payments for far longer than they needed to on their loans. So that's really exciting news, and especially coming into the holidays, what better gift than no more loan debt, and then an additional, sum and refund. And I'm not talking, this isn't a couple $100s. This borrower had over $10,000 refunded to their bank account. So it's very significant.
Great. And I think one of the good news about some of these refunds is that they've been happening quicker and easier than we expected through this process, as you mentioned. So despite the complications, the confusion of all of this, a lot of it is working as intended in some ways, hopefully better than we expected. All right. I've got some more questions here. Let's see. Emilio asked a great question. I also get this often. Emilio is asking, what are the options for seniors who still have student loans? Is there anything else other than the repayment programs we've talked about? I know a lot of people we talk to think, they've been paying for 20, 25 years. Is there a light at the end of the tunnel? Natalia, maybe you can talk, address this, because I know this is something that's come up often because we talk to borrowers who've been paying for much longer than they ever intended to.
So there has been ongoing negotiated rulemaking where it's not soon enough, but potentially in June or July of 2023, we could see expansions or positive changes for income-driven repayment programs, potentially, some of these temporary that we're seeing in public service loan forgiveness, we hope to make permanent, but that's still quite far out. One of the things we are still looking out for is more direction from financial student aid as to how to deal with payments as they, when they're turned on. We did see, it was in Political Pro a few weeks back, a FOIA request of the government of what they were discussing in terms of payments restarting. For example, a potential 3-month grace period where you could, take time to resume repayment. There's still a lot of talk of what they're going to do with defaulted borrowers, potentially, making them whole before they come back on to repayment.